This is the best performing real estate companies out there. First off, read this disclaimer carefully. We are looking at this. In the zeitgeist space, we have data center REITs. If we compare with the S&P 500, which is the benchmark, then you can see that the data center REITs, real estate investment trusts, are much closer to the 52-week highs. Here are the companies in this space. In this video, we will in particular look at CyrusOne. Here you can see the distance from the 52-week lows. There's been a substantial rally. Not too far away from the 52-week highs. Here you can see some market cap. PE is elevated, but that is certainly to be expected in this space. Let's jump into the charts. Well, first, actually, let's look at their website, okay? Trusted partner to the world's leading companies. Through a network of more than 45 data centers in key North American, European, South American, and Asian markets, CyrusOne enables the computing needs for the businesses that change the world. Let's also go to the About page. Enterprise data centers for the world's largest companies. Global firms seeking enterprise co-location solutions have consistently selected CyrusOne, currently serving hundreds of customers and more than 185 of Fortune 1000 customers worldwide. Yeah, very strong growth. Made it the third largest data center provider in the US. Yeah, really interesting company. Okay, so let's first here look at the charts, then we will look at the fundamentals, and then we will have a very important segment about central banks. Okay, let's look at the seasonality of the stock. I recently got myself a subscription to stockcharts.com, and I am going to try it out this month. It looks really promising, so I think I might actually subscribe to it. I was thinking about TradingView, but TradingView is, the community on StockChart is way more professional. Okay, anyway, here's the seasonality of Cone, CyrusOne, and this is the percentage of months in which Cone closed higher than it opened from 2016 to 2020. You can see here that March and May are particularly good months, but also August, that's coming up. You can see here that June and July are some of the lower months, meaning you could, use this data to also time some of your purchasing. Here is the charting system for stockcharts.com. For quite some time, StockCharts, they had this, you couldn't have a full screen chart, but they have now enabled that. They have this new feature, and this is really good. The only gripe I have with stock charts is that I cannot get the percentages here. I can get the stock price. I'm not entirely sure how I can get the percentages. Maybe there's just something to click on, but yeah. Anyway, this is the chart using weekly data points. This is all the data we have, and you can see that, this is just bullish. Higher highs and higher lows. Here you can see, the crash we had, in the market. Extremely sharp V-shaped recovery. For all intents and purposes, this looks rather bullish. Something that is also very interesting is that we have these very clear cycle patterns. Rising, declining, rising, declining, rising, declining, rising, declining. Based on this cycle history, you could make the case that this is still a young rising cycle. You can see here that we had this buy signal here on the PMO. Let's also look at some of the other, we have so many chart styles here, which gives us different perspectives. You can look at like money flow. I really am impressed by stock charts. Here you can see the accumulation distribution line, which is one of my favorites. Here are the daily data points. You can see here that it has been rising with this rally, and the AD line, you can see it is higher here than it was here, which is bullish. It shows us that the buyers are stepping in. If you look at this is the Shemkin money flow, yeah, Chaikin money flow. It also was higher, well, higher here than there. Yeah, there are some bullish signs when it comes to money flow. Let's look at momentum. Here you can see, the RSI. We are, 55, 56-ish daily data points. Decent. This is the Bollinger Bands. We have slipped below the 20-point moving average here today. That is not like super bearish, but it's it's not ideal. You can see here that the lower part of the Bollinger Band is not that far away. On the PPO here, we had a sell signal back there. Let's look at some of the other indicators. Let's time frames. Well, maybe, long-term investing. That's interesting. Here you can see that it pays a very regular dividend. So you are rewarded for being patient and waiting here with CyrusOne. On the KST, brings no sure thing. You have a buy signal here. Yeah, the most interesting observation, I think, is the cycle patterns. I think that's something I would highlight. And given the previous reliability of the cycle patterns, there's a high probability that this is a cycle, a rising cycle that's still in its early phases. That was a bit from stock charts. Really a big fan of the system. I mean, it is so cool. I mean, you can just go here, you can use like camo, and then because these are like predefined by stock charts. And here are some of the favorite indicators used by the experts, like David Keller here. Then you can have his system. Got the RSI classics. Got the 50-day moving average and 200-day. The MACD, also a classic. Yep. Let's look a bit at the fundamentals. You can see here that the market cap is $8.2 billion US. That's rather, some size to it. The dividend percentage is almost 3%. That's pretty decent. I mean, this is a high-tech stock. Okay, it's in the REIT space, data center REITs, but still, it is tech. It is a tech and juicy dividend. That's fantastic. The analyst recommendation is 2.2, which basically is a buy. The target price, the average among the analysts is 72.69 cents. Currently trading for 70.16. Yeah, relatively close. And here you can see some performance data. Like the year-to-date performance is almost 10%. Pretty decent. Here are some of the recent changes here from the analysts. 2 upgrades recently, and a downgrade here from Raymond James. And you can see in this upgrade here from Jefferies, they have a price target of $81, which would basically mean a new all-time high. Saks, they have a number 3 hold on CyrusOne, a D value score, but you simply do not expect a company like this to be a value stock. Hence, this is not something to be too upset about. A growth is fantastic and B momentum really good. So the other style scores are quite clearly pretty good. The industry rank, they have a broad REIT category, top 30%. But as I said, this is something a bit more special. This is not a basic REIT. This is data center REIT, and data center REITs are literally the best performing REITs, REIT subcategory. Given that today is the day for a big meeting for the Federal Reserve, which is very likely to move the markets, I thought we should have a bit of a segment about what central banks are. Okay, They are the master of coin. They emerged in the 20th century to bring stability to the monetary system and banking. There are a lot of critics of the Federal Reserve and central banks more generally. I'm also critical, but I am especially just critical of the extreme power they have. They are far more powerful than people take into account. The problem is that the laissez-faire politics of the 20th century and the centuries preceding that time, they caused a situation which legitimized central banking, because there was total chaos in the banking scene. And you could certainly make the case that the central banks are married to the markets. The huge rally we have seen off the lows on the S&P 500, that is definitively, directly, and almost exclusively the result of the Federal Reserve stepping in to save the markets. Hence, if you want to know the direction of the markets going forward, just pay attention to what the Fed is doing. This is why today is very important, because if Jeremy Powell is basically sends the message that the central bank will protect the market, then that will be bullish. However, if he starts suggesting that the recovery of the market means that the central banks can, the Federal Reserve, can put their gas off the pedal, then we could actually see a sell-off. They are called the lenders of last resort, and those who own the debt, they have a lot of power. They want to be politically neutral and not influenced by fiscal policies. By working to control inflation, they strive to maximize the stability of the local currency. All coins and notes in circulations are provided by and printed by central banks, and unlike the image here in the background where you can see gold coins, the money that is circulated is definitively not backed by anything, real. The money we have in our bank accounts nowadays, it is numbers, it is purely digital. And that is one of the primary criticisms of the central banking system, is that it is not backed by gold or anything that's limited. And this can create a lot of moral hazards. Stability and trustworthiness of a currency is very important, and there is fierce forex competition. The financial markets have become hypersensitive to and obsessive about monetary policies, which is definitively something you will see today and any other day where the central banks have a big meeting. The market is obsessively focused about it and trades on even on the adjectives that are used in the speeches, whether it is very positive, negative, complete over-analyzation, but it matters. It simply does. Gold has historically been used to achieve price stability because it's a fixed resource. However, if you are going to have an economic system which is all about eternal growth, then gold becomes very problematic. Because gold, it has this ability to tame and hold back growth, which is very beneficial from a long-term perspective. But of course, short-term, we have seen that, the current political and economic powers, they just do not have the patience and foresight that you must have to, if you are going to have gold as the currency. Fiat money are printed to boost the economy, determine monetary policy, regulate the supply of money, expand or contract. That's also something the central bank is actively doing. They set reserve requirements, that is, the percentage of deposits banks must hold. By, as an example, increasing that number, they can limit money supply. They set interest rates, That is what it should cost banks to borrow from it, which is called the discount rate, and each other, which is called the federal funds rate. That's effectively is, the cost of money. And by decreasing the interest rate, money supply increases. They also have something called open market operations, and that is their mechanism for trading securities. By buying treasuries from the market, they are adding to the money supply. Inverse effect if they sell them. One of the huge recent controversies when it comes to the Federal Reserve is that they are now buying corporate bonds through ETFs, which is something they were not really supposed to do. We are not super shocked that they did go down that route, because we have seen that in other countries where central banks have gone much further and even bought stocks. And there are quite a few that think that if the market has another big sell-off in USA, the Federal Reserve will get into buying stocks. Okay, whatever you do, of course, you want to let the trend be your friend and pay attention during any time when the central banks have a meeting.